So, hello, ladies and gentlemen, welcome back to my YouTube channel, welcome back to my Facebook, wherever platform you're watching me from. So, guys, I want you guys to hit the subscribe button, follow my account, and comment, and I'll reply to your comment, like and comment. I love you guys. So, today I'll be showing you guys how to do a proper top-down analysis. Either a beginner, intermediate, or advanced trader, you need to do your top-down analysis. I'm going to show you if it don't matter if you're a swing trader, day trader, it's a day trader, but if you're a scalper, I'm going to show you how to do your top-down analysis. So let's head into the chart. Top-down analysis simply means what it means. You start from the top to the down. So let me show you guys how to do a proper top-down analysis. Most traders don't know how to do a proper top-down analysis. So let's head into the chart. So I'll show you guys how to do a proper top-down analysis. So guys, don't forget, hit the subscribe button, like and comment. If you love this video, comment what you want me to do this. So guys, whenever you want to do a top-down analysis, you need to start from the top to the down. Are you getting me? So these are all the time frame you can use to do your top-down analysis. We have the tick, we have the seconds, from the 1 second to 45 seconds. We have the 1 minute to 45 minutes. We have the 1 hour to 4 hours. And we have the daily, weekly, monthly, 3 months, 6 months, 12 months, one range, which is year, 10 range, which is 10 years, and other stuff. So you can clearly see all these stars there. These are the time frame I am using. So you can create your own time frame, either the 4 hour, the 5 hour, the 6 hour, but that's the important in this. So you need to for you as a swing trader or a day trader, you need to start from the weekly, start the daily time frame, start the 4 hours, 2 hours, 1 hour, 30 minutes and 15 minutes. You can clearly see that is all year. Monthly, weekly, daily, 4 hours, 2 hours, 1 hour, 30 minutes, and the 15 minutes. So this time frame, you don't just use all this time frame for the top down analysis. So you can clearly see you use the weekly, daily, and 4 hours for the trend to know where the market is, either in a bullish trend or a bearish trend. I get me. While you use the 2 hours, 1 hour, 30 minutes, and 15 minutes for your entry. Are you getting me? You use the slower time frame for your entry. Whenever you want to enter the trade, you use this time frame for your entry. So let me show you guys how you do a proper top-down analysis. So whenever you want to start a top-down analysis, you start from the weekly time frame. So let's head into the chart. I'm going to be using the live candlestick. I'm not going to be using the the line chart. So you can clearly see this is a live chart. You can clearly see correctly this is a weekly candle. We just have 13 hours before this weekly candlestick close. So this UAUD. So whenever you want to start your top down analysis, either any pair at all, you need to start from the weekly time frame. Or most people start from the bottom, but I like starting from the weekly. Are you getting me? So whenever you want to start, you need to know where the trend is, either in a bullish scenario or a bearish scenario. So how are we going to identify? If we did a bullish scenario, we need for the market to be creating a series of higher high and higher low. If it is a bearish scenario, we need market to be creating lower low and lower high. Are you getting me? So we can clearly see, we back it out, we create. So this, oh sorry guys, taking a long time. So this is what the weekly time frame look like on the line chart. This is what the weekly time frame look like on the line chart. So guys, I want you guys to pause the video and tell me if this market is bullish or bearish. 5 seconds. 5, 4, 3, 2, 1. So if you got it wrong, you wrong. If you got it right, I want you to mark out your higher high, higher low, or your lower high and your lower low. So in this scenario, we can clearly see this was the higher high, and this was the higher low. Can you see? This was the higher low. This was the higher high, and this was the higher low. Now market have pulled back to take out this higher low, shifting this market now bearish. I get it. This because the new this spot because the new lower low, and whenever we have a lower low, we need a lower high, and this becomes the new lower high. You get it. So now we've shifted bearish, created a new lower low. Now this becomes our new lower low, and this becomes our new lower high. You get me? So we can identify that this market is in a bearish move. The weekly time frame is in a bearish move to the downside. Are you getting me? So let me push this up. Sorry guys, let me push this up. This is for the weekly time frame. You can clearly see this for the weekly time frame. So let's go down to the daily time frame. Let's see what the daily time frame is creating. We can clearly see on the daily time frame, most people, whenever they want to do a top-down analysis, they zoom in like this, and that is not an ideal top-down analysis. You just want to look at 2024 trade, 2025 trade. You zoom in to know what the recent price action is telling you. I get me. You zoom in, you start either the least backward you need to go whenever you're doing the top down analysis is either 2 years back or 1 year back. Are you getting me? So we need to zoom in and see what the price is telling us at this point. We can clearly see at this point, this market is creating a back it out. So it will go too much. Lower low, lower high, lower low, lower high, lower low, structure, higher high, higher low, structure. Can you see it? Can you see it? This is the structure created in the daily time frame. Let me take it to the weekly structure. So I still want you guys to pause the video and tell me if this market is, this daily time frame is bullish or it is bearish. I want you guys to tell me what this time frame is looking at here. What we are looking at on this time frame. I give you guys 5 seconds to tell me if it's bullish, and back at your higher high, higher low, or your lower high, lower low. If you get it well, you get it well. If you get it right, you get it right. So we can clearly see we were creating lower lows, lower high, lower low, lower high, lower low, potential lower high, but did not create the leg to the downside. So we shifted from here, we shifted bullish, created a higher high, and this was the higher high. Back it out. Higher high, and whenever we have a higher high, we need a higher low. I get it. So this becomes the higher low. I get it. So we can clearly see we've shifted below the higher low, shifting this market from bullish to bearish. I get it. Now this is now the new lower low, and this is now the new lower high. We are no longer bullish on this trend, we are now bearish. This is the lower low, and this is the lower high. You can clearly see it's matched this weekly time frame. Take a look. You can clearly see, right? You can clearly see the structure is matching it. So let's go down to the 4 hours time frame, so we can see what the 4 hours is creating, either a bullish move or a bearish move. So this is the 4 hours time frame. You can clearly see we have not started using our strategy. We are just finding where the market is going, either the upside or the downside. You get me? So On the 4 hours time frame, this is the structure created. We're creating lower low, lower high, lower low, shifted, created a new lower low, lower high, lower low, structure, lower low, structure, structure, structure. I get me. So this is what the 4 hours time frame look like. This is what the 4 hours time frame look like. So I want you guys to pause the video and tell me if this market is bullish or bearish. I want you guys to pause the video and tell me if this market is bullish or bearish. So 5 seconds. 1, 2, 3, 4, 5. And I want you guys to know why the market is bullish and why the market is bearish. So in this scenario, we calculate we're creating lower lows, lower high, lower low, lower high, lower low to the downside, lower high, lower low, and we calculate we have not broken above this lower high, so we are still bearish on this trend. I get me. So we have not broken above this lower high, so we are still bearish on this trend. All we are waiting for is to take out this new lower low for it to continue the move to the downside. So we are still bearish on this 4-hour time frame. So let me move the 4-hour time frame to those line charts, and you can see it's matched perfectly. You see this 4-hour time frame match exactly with this point here. We can clearly see. Sorry guys, we can clearly see it's matched exactly with that point there. So we can clearly see match exactly with that point here. Bring it out, bring this out. We can clearly see the 3 time frame is telling us bearish, bearish, bearish. Can you see? We've identified that the 3 time frame is telling us bearish to the downside. Are you getting me? So what do you think we need to do on this trade? We need to buy or sell. Right, we need to sell this market. The market is telling us sell to the downside. Are you getting me? So we've identified, now we identify that it looks more cleaner to sell than to buy. Are you getting me? The next step is to know where we are in the market. Are we at a support level or are we at a resistance level? Are you getting me? So most traders don't know where they are in the market. Most traders, when they want to sell, they sell at a support and they buy at a resistance level. That is not a ideal trade. Are you getting me? You need the market to come back to your resistance level for you to take the trade. Now, on the weekly time frame, we can clearly see the market is at a support level, which is at a lowest point. It is at a low, and we can't sell at a low. Sorry, we can't sell at a low. We need a retracement, a pullback to our resistance level for we to take the trade to the downside. Are you getting me? We need a pullback, a retracement to our resistance level for we to take the trade to the downside. So whenever you are looking for an area of interest, a resistance or a support level, you need to mark your support or resistance level at the weekly area or 4 hours time frame. Don't go below the 4 hours time frame to mark your support or resistance level. Are you getting me? Which is the area of interest. Don't go below the 4 hours time frame to mark it, because it is not a strong area of interest. Are you getting me? Where do you think is a strong area of interest? Where the one candlestick form in an hour, or where one candlestick form in a week, one candlestick form in a week, one candlestick form in a day, one candlestick form in 4 hours? Where do you think is more respected and more stronger? Is the weekly, daily, and 4 hours? So we mark our area of interest in the weekly, daily, and the 4 hours time frame. So for this scenario, we are looking for a sell. So whenever you are doing a top-down analysis and you want to mark your area of interest, your area of interest needs to be in between the lower high and the lower low. Are you getting me? It needs to be this is the lower high, and this is the lower low. Are you getting me? This is the lower low. You need to look for your area of interest inside this box. Anything above this box, we are no longer bearish, we are not bullish. Are you getting me? And anything below this box, we are continuing the move to the downside. Are you getting me? So you need to look for your area of interest inside this box. Are you getting me? Inside this box, you don't need to back out your area of interest. You start to back your area of interest from here. Back your area of interest from here. Say this is a well respected resistance level. Price pull back here. Yes, this is a well respected area, but if price pull back to this level, we are no longer bullish. We are no longer bearish. We are not bullish. Are you getting me? And we can't say why the market is bullish. Are you getting me? So we mark your area of interest inside this box. So you can clearly see this. You can clearly see, you'll be asking, what is this blue line? This blue line is my EMA. I use the 50 EMA. The 50 EMA is just a minor confidence to add to your trade. Whenever we are under, we buy. Whenever we are above it, we sell. The EMA is just like a support and a resistance. Whenever we are under, we can clearly see whenever the EMA is under, we move to the upside, and whenever we are whenever the EMA is under, we move to the upside. Whenever the EMA is at the upside, we move to the downside. Are you getting me? So to back your area of interest, we need to back it inside this box. And what area of interest are we backing? Is it a resistance or a support? Correct. We are backing a resistance level. So whenever I mark my area of interest, I need nothing less than 3 touches to show me that that is a well respected area of interest. If I see 2 touches, that is not a strong area of interest. Are you getting me? I look for a area of interest which has more than 3 touches. Are you getting me? So we can clearly see I spotted this one area of interest at this spot here. This is the first area of interest I spotted. We can clearly see a resistance, resistance. We can clearly see we have 1 touch, 2 touch, 3, 4, 5, and 6 touch. Are you getting me? And 6 touch. Showing us this is a well respected area of interest. Are you getting me? So let's go further and look for another area of interest. So whenever you back in your area of interest, you still need to look at if a area of interest is at your previous structure point. This is your previous structure point. This is the previous structure point. You can clearly see this was the lower low before, and this was the lower high that will taking out this lower low, created a new lower low. This is now a new lower low. This is now a new lower low. For instance, the market can pull back to this previous structure point, this previous support level used as a resistance to pull back to the downside. So let's look for another area of interest. We need at least 2 areas of interest in each time frame. So sorry, let me close this. Why is it not cloning? So clone. Let's look for another resistance level. Whoa, spotted one resistance level again. This is a support. You can clearly see a resistance, support, a resistance, a support, a support, and a support. Are you getting me? You guys remember I said market can pull back to this support, use it as a resistance to push price to the downside, and you can clearly see that area is a support level we use as a resistance level. So price can pull back to this place and move to the downside. Are you getting me? So we can spot out these 2 areas of interest on the weekly time frame. So let's go down to the daily time frame. If the daily area of interest matches with the weekly area of interest, so let's go down to the daily time frame. Sorry, my network. Oh. Yeah, this is the daily time frame. You can clearly see we have been using Euro AUD, we haven't changed the pair. This is still Euro AUD. So Euro AUD, we can clearly see we are in a bullish move to the downside, and you guys can remember on the weekly time frame, I mark out my lower high and my lower low. In the daily time frame, I will still do that on the daily time frame. We mark out our lower high and we mark out our lower low. Are you getting me? Our lower low. So you can clearly see this is our lower high and this is our lower low. We don't need market to break out of this lower high. Why? If market broke out of this lower high, we are no longer bearish, we are now shifting bullish. So this area of interest is not that relevant again. Are you getting me? This first weekly area of interest is not that relevant. Why? If the market pull back to that level, we are no longer bearish, we have shifted from bearish to bullish. Are you getting me? So this area of interest is no longer irrelevant again. Are you getting me? So let's go down to the daily time frame. So we are going to be looking at this second area of interest. Take note, we are no longer looking at this area of interest, we are looking at this area of interest where the market can pull back to here and the market will still be bearish. So let's see if this weekly area of interest align with the daily area of interest. You can clearly see this is at a resistance here, this is at a resistance support. Let's move further. My network is bad, sorry guys. Support at this point. Guys, we use it as a support here. Use it as a resistance, support, resistance, resistance. We can clearly see it's a well respected resistance level. Are you getting me? So if this market pull back to this, where's my arrow? If this market pull back to this pulse, the EMA could have gotten to this point. Use this as a resistance to push price to the downside. Are you getting me? So this is still a well respected daily and weekly area of interest. So let's go down to the 4 hours time frame. So let's go down to the let's go down to the 4 hours time frame. The 4 hours time frame. 4 hours time frame. My network is bad, guys. So this is the 4 hours time frame. You guys keep note. Whenever you move to time frame from the weekly to the 4 hours, you need to back at your your lower high and your lower low. Are you getting me? You need to back at your lower low and your lower high. So this is our lower high and this is our lower low. Are you getting me? This is our lower high and this is our lower low. For we to continue the bearish momentum, we don't need to take out this lower high. Are you getting me? And now we can clearly see for this market to pull back to this area of interest, the 4 hours can shift bearish. Yes, the 4 hours can shift bearish. I know. That's why I say you can the weekly and the daily is more stronger than the other time frame. So one thing you are going to do is when you come, once the market goes to this daily and weekly area of interest, you wait for the shift of structure. The market can do like this, something like this. Calculate it, push to the upside, create lower low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. All you need to do for you to take this trade, calculate it now. We are no longer bearish on the daily or the 4 hours time frame. Now we have shifted from bearish to bullish. Are you getting me? But if you go down to the daily time frame is still, listen to me, is still bearish. Are you getting me? All you need to do in the 4 hours is to wait for the 4 hours to shift bearish, creating something like this. You know that this is the higher high and this is the higher low. You wait for something like this for the market to take out this higher low, take out the higher low, retest this higher low. You know it's a support level, retest this as a resistance for you to push price to the downside. Are you getting me? So That is how to do a proper top-down analysis. So you can see I've just used the weekly, daily, and 4 hours to do, so back at my structure, back at my support and resistance, back at my know where the trade is going. Now we go down to the 2 hours to the 2 hours to the 15 minutes. So we go down to the 2 hours to the 15 minutes. 2 hours to the 15 minutes. If you go down to the 2 hours time frame, we can clearly see the 2 hours is still bearish. I love this 2 hours time frame. This is the 2 hours lower high, and this is the 2 hours lower low. If the market pull back to this area of interest, you wait for your rejection and your shift of structure. Are you getting me? You are going to wait for your shift of structure on the 2 hours time frame. The market will create something like this: higher high, higher low, higher high, higher low. Take out this lower high, shifting the market bullish, creating a new higher high. All you need to do to take this trade to the downside is to wait for your shift of structure. You wait for this higher low to be taken out, shifting the market bearish. You wait for your retest to the retest to any resistance level, then you take the trade to the downside. The same thing in the 1 hour time frame. You wait for your shift of structure if the market shifted bullish. Are you getting me? If the market shifted bullish and you are planning to sell, you wait for your shift of structure for you to take the trade to the downside. No shift of structure, no trade. You need to wait for the lower time frame to shift structure for you to take to the trade to the downside. Well, let me give you an example. Let's go to the weekly time frame. Let me give you guys a simple example. So guys, this is the example I'm going to be making. This is for a buy scenario. Are you getting me? This is the 4 hours time frame, and this is a 30 minutes time frame. You can clearly see if I move this to this point here, you can clearly see it aligns with it. Are you getting me? But this is just the 30 minutes time frame. Are you getting me? So you know that in the 4 hours time frame we can have this move, and in the 30 minutes the move will be much. Are you getting me? Because it for this one candlestick to be created on this 30 minutes, we need just 30 minutes, and for one candlestick to be formed on this 4 hour, we need 4 hours for one candlestick to be formed. So I clearly see this is in a bullish move, and for we to continue this bullish move, we need the market to pull back to this previous structure point, this resistance, use this as a support for we to push to the upside. Are you getting me? But for we to move to the upside, we need something like this for we to move to the upside, right? But on the 30 minutes time frame, you can place it, this area here is the same thing as this area here. Are you getting me? But on the 30 minutes, for this market to pull back to this area of interest, the 30 minutes have to shift bearish. Are you getting me? Now, on the 30 minutes, this is the 30 minutes higher high, and this is the 30 minutes higher low. Are you getting me? So for this market, for these 4 hours to pull back to this area of interest, the 30 minutes has to shift bearish, creating something like this, creating series of lower low, lower high, lower low, lower high, lower low, lower high. Are you getting me? Lower low, lower high, lower low, lower high. Are you getting me? So all you need to do as a trader is to wait. Once the market has gotten to this point, you wait for your rejection, and you need a shift of structure. You wait for the 30 minutes, you know that the 30 minutes now is no longer bullish, it's now bearish, and you need to buy this trade to the upside. You need to wait for the 30 minutes to shift bullish to create something like this, create a new, hold on, this will now become the new lower low, and this will become the new lower high. Are you getting me, guys? This will become the new lower high. All you need to do as a trader is to wait for the shift of structure. Wait for the market to take out this lower high. Use it as a support. Use it as a support. Where is it stopping? Use it as a support. Use the resistance as a support to move to the upside. Are you getting me? So we'll be moving higher, 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 low, higher, 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 low. Are you getting me? So that is how we'll do a proper a top down analysis. You wait for the lower time frame, such as the 1 hour, 30 minutes, 15 minutes, to shift structure. Are you getting me? So you wait for it to shift structure for you to take the trade. If the 1 hour is telling you bully, if you are planning to sell at the if you're planning to sell and the 30 minutes is showing you bullish, you wait for it to shift bearish for you to take it. You wait for the 30 minutes to shift bullish for you to take the trade to the upside. So guys, for this market to pull back to this area of patience, that is where patience pays. Most traders are impatient. They will still want to carry the trade to the downside, to it to the one who carry the trade to this point, they buy the trade. That's not an ideal trade. You need to be patient for the trade to pull back here. Be patient for the trade to shift the structure. So while the trade has shifted structure, you don't just enter the trade to the upside. You still need some kind of confirmation. You need some kind of you need your rejection candlestick, you need your engulfing, you need some kind of candlestick pattern to fall for you to take the trade to the upside. So guys, if you guys want to know more about candlestick pattern, comment candlestick pattern and I will do a video about some of the candlestick pattern. So guys, see you on my next video. Like and sub. Please guys, subscribe, like and comment, and I will reply to your comment. Like, comment, and follow my account or subscribe. So if you guys like the video, comment, like. I really appreciate. Like and sub, guys. See you on my next video. Go make money.